Hi, welcome back to Real Estate Insiders. We're here now with Tanya Rose. She's a mortgage banker with FEMBI Mortgage, and she's going to talk about some of the changes in regulations recently and how that really affects the home buying process and how far ahead you need to plan when you're buying a home or even refinancing. So Tanya, tell us a little about yourself. How long have you been doing this?
This is my 19th year in the mortgage industry, and I've been a loan officer. I love doing it, and helping people is really what brings hope to the future.
I think maybe there's not a lot of people that can say they've been doing it for 19 years, because we know there were some years in there like where a lot of people went to deliver pizzas.
We've seen a lot of the ups and downs.
Absolutely. Well, congratulations on being the last woman standing in the mortgage banking business. So we were talking earlier about a lot of the changes that have happened in mortgage lending and how you really have to change your strategies when you go to buy a house. And you were telling me that one of the most important things was that where before maybe you planned ahead 30 days or a month and a half to buy a house, now you were saying it's much longer. So when do you think people should start planning?
It's really never too soon to start planning. If you are thinking about purchasing a home, even when you're signing a lease and you know you have a year left on that lease, you might want to think about talking to a loan officer at that time to look at your credit, for instance.
So that's the real problem the issue is, with all the new guidelines and regulations, you really need to get your ducks in a row way ahead of time, or you're going to end up maybe costing you money and maybe costing you brain cells and aggravation.
Buried in paperwork.
Yeah, if you don't plan ahead. So let's talk about a couple of the things that we should plan ahead with. You were saying the number one thing. Go ahead.
Is credit. Let's talk about credit, because your score, we look at the three major bureaus and then we take the middle of the score. If you're 1 point off, you might not qualify for a program. So it's important to meet and look at your credit and see what you can do to raise your scores.
So one of the things the credit score would affect is really whether you get approved or you don't get approved.
And also what your interest rate might be. A higher credit score is going to be a lower interest rate.
Oh, so it's not like it used to be where you called up the bank and said, what's your rate today? And they gave you a rate, and that was a rate that everybody got. You're saying that's not true anymore.
No, it's all about your credit score and where you sit and what programs you qualify for and what rates you're going to have.
So is it broken down in some kind of tier where...
Yeah, absolutely. There's a range between 600 and 800 or 850, but certainly the better your credit score. So what we do when we meet with somebody is analyze their credit score and see how we can get points raised. If there's something, maybe a collection that they didn't even know about was out there. There could be an address change and maybe they didn't even know there was a collection there, and then they need to get rid of that. And certainly if you do it 30 days ahead, your credit score is going to go down. But if you're going to do it 6 months ahead, your credit score is going to be better in 6 months.
Right, so it would take you more than 30 days to make any necessary corrections.
Absolutely.
And give the scores a chance to go up.
Absolutely.
And from what you're telling me is if your score goes up, you're actually going to pay less money in interest.
Of course.
So
and less money in interest is, could be thousands and could be $100,000 over the course of 30 years on a mortgage.
Absolutely. So that little bit of planning would absolutely pay off. So we've all heard, I think, that it makes sense to check your credit at least once a year to look for things like identity theft. You don't know if there's really huge inaccuracies in report, things that have been happened that aren't even you. But you're saying even more important than that would be to sort of deal with it with a scalpel and figure out what can I do to make my score higher.
I don't think there's anyone out there that couldn't do something to improve their score.
So even if you have perfect credit?
Even if you have perfect credit. I've never seen anyone with perfect credit. So in 19 years, I would think somebody had perfect credit, but nobody has perfect credit. There's always something you can do.
Well, how about people that don't have much credit? How would they benefit from starting early in the process?
Well, if they don't have much credit, maybe we could build a secured credit card or, a secured line of credit so that they have enough credit to qualify for those programs that
Right. So, well, I can see the scenario if somebody doesn't have any credit and they go to see a realtor because their lease is up in 45 days, and the realtor starts showing them properties.
Right.
Nobody knows at that point that they may not even qualify for a mortgage because they don't have any credit. But what you're saying is 6 months is enough time for you to teach somebody how to build up their credit.
Yes.
So that great news.
Again, there's no time frame that you shouldn't do it. If you're thinking a year or 2 years, even, the sooner you start planning, the better off you'll be.
If somebody's not looking to buy a house, but they have these same credit issues, are you also available to help them with that sort of thing?
Absolutely.
Just to counsel them.
And someday they probably will buy a home, so it's important to know that now.
That's very nice of you. All right, so credit is one thing that we want to look ahead for. How about the other things, income, assets? Is there any way to plan ahead for those items?
Sure. I mean, your income certainly, especially if you're self-employed, you want to make sure that you're keeping your books correctly, where, there could be one little thing that your accountant is doing now that maybe we're going to question, and not that we're going to question it to the point of you can't get the loan, but that could happen.
Right, so at least you'll have a 6-month period where you'd be able to counsel someone and say, listen, here's what you should do, here's what you shouldn't do over the next 6 months. Not saying you won't get a loan, but you may gum up the works and create a lot of aggravation and chasing around for papers.
Correct.
Or explaining things.
Right. Do you get pay stubs? Do you not get pay stubs? Do you have a W-2? Are you 1099? I mean, these are all big questions that when you go for a mortgage, really, you should know ahead of time and have analyzed and be able to present in a good package.
And my understanding is, depending on the type of income you get, it really makes a difference how long you receive it for if you're self-employed. So if you know ahead of time, I'm a salaried employee, I need to be on a job for this long or in the same line of work, or if I'm self-employed, I need to be self-employed and have my records for a certain period of time.
Right.
Again, if you showed up at a realtor's door and said, I'm ready to buy a house, and hadn't done that planning 6 months ahead of time, you may just be out of luck, and that may be your 6-month planning date, and everything is moved ahead.
That's right.
And put off rather than getting to what you really want, which is
now you're extending your lease and paying more rent to someone else that you could have been a homeowner already.
Absolutely. And with your lease, there's probably documentation you want to keep as far as your housing history and payment history on your lease.
Yeah, absolutely.
Like you may want to be paying with a check instead of by cash.
Absolutely.
So if you do that 6 months ahead of time, you'd solve a really, really big problem.
That's correct.
So you mentioned also assets. What kind of planning would you have to do with regard to your assets?
Well, one of the things people are talking about these days are, when they go for a mortgage, you've heard your neighbor or friend say it. It's so much paperwork. I can't believe what they're asking me for. Oh my gosh, I've had to get all this paperwork. Well, if you're prepared and you know that you're going to be taking this money from your 401k, or you have a savings account, or you're getting a gift, these are monies that you can consolidate and put into one place, so that you don't have a $500 here, $1,000 in one statement, and it's all over the place. You really limit the questions and give a cleaner package to the underwriter, which is going to help your chances of approval and also your aggravation.
Yeah, and a lot of people think that all these hoops they have to jump through is a result of mortgage guidelines, but a lot of it has to do with Homeland Security, Patriot Act, where people get their money from. Mm-hmm. So what you're saying is get all your money in one pile that you're going to need to close, so you don't have to worry about doing a paper trail on every penny that's going into the transaction, right?
Right.
So, I mean, it sounds easy if you do plan ahead.
If you do plan ahead. I have client after client that, I can't stress enough. I mean, that's one of the things that we really talk about is planning ahead, meeting just like you would meet with your accountant or get your oil changed. I mean, you need to do these maintenance things in order to prepare for getting a mortgage.
I know also from being in the business a long time that the whole procedure has also changed for realtors, in that before it was so easy for someone to get finance. I mean, really, years ago, remember, you hold the mirror up to their mouth, and if it fogged up a little bit, you could get a mortgage. So it wasn't a big deal to do it, to plan ahead, to do any kind of pre-qualifying. Anyone that wanted to buy a house could really find a way to buy a house.
Right.
But I know that the home buying process has really changed to when you go see a professional realtor, the first thing they're going to say is, wait, before we start running around town looking at houses, I want you to sit with a mortgage banker, and they know that, number one, I want this person to look at your credit, not just to see whether you're approvable,
right,
but to see if you can be saving money and lower your payment. Because what happens if your payments are lower?
You save money.
Yeah, and you can afford more house.
And you can
so
afford
you can
absolutely.
you can afford a bigger house. So professional realtors have also got with the program where they know that you need to plan way ahead.
Right.
And the way inventory is going so quickly, they like the extra time, I think, also to find you what you really need.
Absolutely.
So everybody has an interest in planning ahead, not just the home buyer.
Right.
So, how long does somebody have to spend with you to figure out what you're going to do?
You know what? Once we collect the documents, maybe an hour of good counseling will get you right to a good map to homeownership.
Well, that's beautiful. And whether it's your first home, second home, investment property, the procedure, I would expect, is sort of the same.
Absolutely the same. Absolutely.
Guidelines are different, but the procedure would be the same.
And now with technology, we can do it face-to-face. My door's always open, or over the phone, or sending in documents through fax or email.
And I think when you mentioned before about people complaining, I'm jumping through all these hoops, I can't believe what they're putting me through, they should also be aware that no matter where you go for financing, you're going to run into the same things. You're not going to do better with no planning.
Correct.
In any case, it's always going to make sense to plan ahead. So, Tanya, tell us how they can reach you if they want to set up a consultation.
Okay. Well, my phone line's open, 561-398-1003.
And I would expect it's just a matter of you telling people what paperwork to bring, and then you'll analyze what they have and spend the time to put it all together and put them on a real roadmap to make it easier for everybody.
Absolutely.
Well, thanks, Tanya, for joining us on Real Estate Insiders, and we hope to see you again soon.
All right.